The markets had a really rough week this week. Nobody liked the Fed's minutes saying that rates could go up in a few years. Is the party over?
Well, that's what everyone's wondering. Right now, you're having a pullback. We had an almost unabated start to the year where stocks rallied, not in any crazy fashion, but they just went nowhere but up for the first 3 months of the year. Now we're starting to have a pullback, and there's two camps on this. One camp says this is natural, we should digest the rally. The other camp says the Fed isn't going to come out with QE3, and that raft of liquidity that we've been floating on is about to go away and come out of the market. We'll see what happens. I tend to fall in the former camp. I think this is a pretty healthy pullback, and if it really extends, then we can start having that second conversation.
And what about inflation, oil prices, gold? Gold had a pullback. What do you think is going on there?
Well, oil prices were another big story in the first quarter. A bunch of people were talking about the impact on first quarter earnings. Then today we get retail sales figures that were pretty strong relative to where the level of oil prices are at. Gasoline at $4 a gallon, you would think retail sales are going to be hit. But the real impact comes in the rate of change. It's not the level of gas prices, it's how quickly they get there and whether or not they stay there for a long time. We've become conditioned to higher gas prices in this country in the past few years. So $4 gasoline doesn't scare people in the same way it did, say, 2 or 3 years ago. You saw that in the retail sales today. The other impact on inflation is, people are worried about rates going really, shooting higher. Treasury rates right now and mortgage rates are so low that an increase is not the nightmare that some people would have you believe. We're at such a low level that a rise in rates, if it's contained to a certain level, is not going to absolutely crush this market or crush the economic recovery. And I think that's being borne out in the numbers. We have a jobs report tomorrow, expected to be fairly strong, above 200,000, that, if we get that, the economic recovery is on, and people that have been denying it are sort of running out of evidence.
We've had some setbacks, as you've mentioned, but what about gold? What do you think about that?
Well, the gold market has really sold off after you saw the Fed indicate that they're not going to be as likely to do more easing this time around. Gold has grown pretty much along with the Fed's balance sheet, and in contrast to what the dollar has done. The dollar's been firming up this week, gold has sold off. If the Fed doesn't continue expanding its balance sheet, that likely means that gold is in for some pain, and we've already seen that happen just with the indication they're not going to expand that balance sheet.